London Aquis listed Incanthera is a UK-based company specially focused on innovative technologies in dermatology and oncology. Just had some breaking news today with an announcement of a commercial update on the planned launch of Skin and Cell with Marionnaud, part of the world's largest health, beauty and lifestyle brand retailer, A.S. Watson Group. Tim McCarthy is chairman of Incanthera. He joins us now. Looking through the key highlights, this does seem to be quite a seminal moment. And of course, it's a vote in favour of the client you've been working with in what you're doing at Incanthera. Give us some more details about what this means for a small cap company like yourselves.
Of course. Well, good morning, Jeremy. Thank you for having us on this morning. Yes, fantastic update this morning. This follows on, as you said in your introduction, from a deal announcement we put out in December last year, which was, as I think I said at the time, truly transformational for the company. So what we've got is a company of Incanthera, which was, I would call, an atypical biotech development company, no revenues, loss-making, going to shareholders and capital markets for funding. And within the next 12 months, we're going to turn that from that profile into a company with significant revenues, significant bottom line, throwing off cash, and as I've said previously, to drive the valuation of this company up and even start paying dividends to shareholders, which is a peculiar thing to say when you're talking about typically a biotech company.
Big aspirations. And that's exactly what people want to hear, is the fact you've got this in mind in the longer term picture. Sorry, you were saying?
No, I was going to respond to your introduction and the announcement we put out today. We've always said that we keep the market updated on a regular basis. So we're about 3 months in, and not only are we reporting today that everything is on track, but there's 2 or 3 new announcements, in the release this morning, which is all really positive. And that goes alongside a new research note that's been initiated today as well. So I can talk about that as well if you wish.
Yes, I'll pick up on that in just a minute. I want to look through into getting an understanding as to what your USP is. Why is Marionnaud specifically interested in what you've got to offer?
So Marionnaud and the wider A.S. Watson store group is very much, as you said again in your introduction, it's the world's largest beauty and retail, well-being retailer, and over 16,000 stores across the world, across Europe, China, Asia, serving something like 28 different markets. So that's to put it in context in terms of the deal and the partner that we have. And prior to announcing the deal in December, we'd been talking to Marionnaud for about 12 months. And they identified to us that they had a gap in their shelf for what they describe and what we describe as a high-end luxury skincare product. Now, what they were looking for specifically was something which they could deliver to their customers, which had some real science behind it. So there's a lot of desire in the consumer group at the moment to know what they're putting on their skin. They just don't want to put a skin cream on just because it feels nice or it smells nice. And what we have is a unique technology which allows delivery of certain vitamins in this case through the barrier of the skin. So if you think about your skin, one of the biggest, well, it is the biggest organ in your body or on your body, and it's a very clever organ. It's robust, it's waterproof. When you go out in the rain, you don't leak. But those qualities also make it very difficult to deliver either drugs or any sort of treatment through the skin. Yeah, and many companies have tried with many very different methods to do this, and we have found the way through unique formulation of skin cream to be able to add into those creams certain products which we know really benefit the skin and the cells underneath the skin, which get deteriorated, especially through exposure to UV rays and just general living. And so being able to deliver those in a very easy to use and very pleasant high class skin cream and get it through the barrier of the skin is something that nobody else can do.
Talk to us a little bit about where you are in the cycle of getting this up and running in terms of manufacturing.
Okay, so when we put the announcement out in December, we said that we had initiated the manufacturing cycle for the first order, and that was going to be delivered in Q2. So what we confirmed today is that everything's on track, and that is still on track to be delivered in Q2. The new news today, though, is we intimated in December that the first order was going to be 25,000 units. Now, when I talk about a unit, that's one bottle of face cream, one bottle of hand cream, each one is a unit. In recent discussions with Marionnaud, they're getting quite excited about the prospects of this. So they've asked us to double that first order to 50,000, which is a fantastic endorsement, and we're very excited about that. So that's all on track. And what we've also discussed with Marionnaud is what they expect the rollout to be and what the further orders are going to be. So the second order, or the second manufacturing batch, I should say, is going to be 5 times the size, so 250,000 units. And that gives you an idea of the confidence that Marionnaud have in what they believe is going to be the rollout and the acceptance of their customers and the demand. So our nice challenge is keeping up with that. But we don't need to really worry about that, in the sense that we have contracted a Swiss manufacturing group called Frica, who do all of the formulation work, they package it, and they deliver it to Marionnaud in Switzerland. So all that is taken care of by us. So we just need to keep up with them.
Yeah, that's quite a big jump from 50 to 250,000. What brought about the 250,000 number particularly? Was there some sort of metric you're working on, sort of economics that you have to deliver in order to make this work? Or what's the reasoning behind the 250,000?
It's to anticipate the rollout. So the way that it's going to work is the initial launch with 50,000 now is going to be in around 100 stores in primarily Switzerland and Austria. So this is like the initial launch, establishing the brand, the profile, getting their marketing up and running, getting the initial feedback from the consumers. But Marionnaud anticipates to roll that out through the rest of Europe very quickly. So this is a rolling sort of program, if I can use that expression. So to jump from 50 to 250 it sounds a lot, and it is a lot for us in terms of what it means from a revenue perspective and everything else. But when you think about there's a total of 1,200 stores just across Europe, as opposed to the 100 stores in the initial launch, you can see how that multiplies very quickly. And you get 2 aspects to this. One is you get more stores coming on each week, each month, so that accelerates the number of units which we need to produce and supply. But also you then replenish the stores that you already supplied first as they use up their stock. So it very quickly accelerates to very big numbers, in fact. And I'm only talking at the moment about Europe. 1,200 versus the total of 16,000. It starts to get a little bit crazy.
Yeah. What about, you spoke briefly about the company you've contracted to manufacture this. What was the basis of your choice there? And as you increase, presumably your next order will be even larger. Do you have then to start to diversify away from that producer, or is it something you're able to keep with?
There's lots of questions in that one question. So firstly, there was a desire from Marionnaud and Watsons to have the product made in Switzerland.
Right.
It's seen to be a mark of quality, and especially in the Asian markets, that's very well received. And the only way you can have your product stamped made in Switzerland if you actually make it in Switzerland. That's an obvious thing to say, but and Frica particularly, not only being based in Switzerland, but they are a high-end manufacturer who deal with a lot of the very well-known cosmetic brands. So they're very used to formulating, manufacturing, and packaging these sort of products. And they have a lot of capacity. So it ticks all the boxes for us. Now, going forward, we will always think of contingencies, and we will more than likely find another manufacturer to come alongside Frica. But we have no problems in terms of their capacity, their willingness to do this, and we have a very good working relation with Frica, actually. So.
I'm just looking at the document, the research that's been initiated on Incanthera, published by Stanford. There's some great detail in here, but explain the real revenue generation potential in the various stages of the commercial rollout that you've got, because exciting times, but there's lots going on.
So this is a research note which was initiated by Stanford Capital Partners, written by their analyst Mike Jeremy, and very detailed note, and some interesting sort of observations he made in the note, and especially as you specifically refer to his revenue projections. So his approach is to look at 2 scenarios. So if you like, the conservative scenario, which he's calling scenario 1, is that the rollout goes through Europe and then it doesn't go any further. So a total of 1,200 stores, which remains constant. And then the second scenario, which is a little bit more ambitious, is that we do then carry on from Europe into Asia. So then you obviously see the number of stores increasing. Now, under the scenario 1, he's predicting in our first financial year, so just to put that in context, our financial year goes from 1st of April to March. So literally in a couple of weeks or whatever, we're into the new financial year. So that's his projection from there. And he's projecting on the basis of the initial rollout in this first year, which obviously builds the number of stores, that the revenues will reach around 10 million and with a 30% EBITDA. Now, he's then assuming that we come up to the full 1,200 stores across Europe over the next few years. And obviously there's replenishment, as I mentioned earlier on, so the numbers start to grow. And in the third year, he's projecting 33 million revenue with still a 30% EBITDA on the bottom line. So whichever way you interpret that, that's very, very good. And as I said right at the beginning of the interview, coming from a profile of a biotech company, which is no revenues, loss-making, into sudden revenues and immediate profitability and cash generation this next financial year, that is truly transformational for us. If you look at the second scenario, he's got the same assumption in this first year because we're rolling out across Europe, but he's assuming from the third year, then we roll out into Asia as well. So you go from 10 million up to over 90 million in the third year, still with the same percentage of EBITDA. Now, whichever way you look at those numbers, and I'm sure he's done it deliberately so there's a range and people can make their own assumptions, but you know, that's significant numbers.
Yeah. What's the overall market like for this particular product and this sector? Because there's a lot of products out there, it has to be said, and you've explained a little bit about your USP with the agreement you've hammered out. What is the market like now for the product you're making? And you're up against some big names.
We are up against big names, but the important thing for us is that Marionnaud and Watsons have that massive presence in the market. They have a very loyal customer following, and they are going to use this almost as what they call their hero product. It's a product profile back to the basics of a very high-end luxury skincare, which feels nice on your skin, it smells nice, but it's the science behind it. So we're going to be involved with their team in terms of educating them as to how to present this product. They're going to do a lot of marketing. It's going to go on their website as well. But this is a product which they have almost drawn into them from us. We've worked very closely with them on the product profile, and they know, as I said, I think earlier in the interview, that their consumers are looking for something different. They want to be able to understand what the science is behind it, what good it is doing for them, and this is exactly what these guys have been looking for.
So that's the product side of it. The investment side of it. What's the message I think I should ask you about the potential for investors, the share price, and the long-term prospects, and obviously shareholder return?
Of course. Well, we got a very good response from the initial announcement in December, and I think everybody understood that, you know, we're changing as a company because of the deal and the implications of that. I think what today's announcement says is, look, we're on track. In fact, we're ahead of ourselves, and very, very positive feedback from Marionnaud. You overlay that with the projections of the revenues that just come out in the research note today. So you're back to some pretty basic sort of numbers and scenarios. How do you value a company that has suddenly got 10 million revenues with a 30% bottom line? It's certainly not at the level we are now, either in share price or valuation. So something's got to give. And my belief is that once people understand that everything's on track, you know, it's even better than we thought in December. There's a note there which, independent of ourselves, is giving some revenue projections, and they will start to think, wow, I want to be part of this story. Yeah.
Interesting story. Look, thanks indeed for passing. It's great to be able to speak to you and catch up with what's happening at Incanthera.
Okay, thank you very much,
Tim,
Jeremy.
it's a pleasure. Tim McCarthy is chairman of the company, a business clearly moving very fast.